We are in a period that future history books will likely record as the cold winter when the Great Unraveling began. In the previous video, I explained how the dollar is melting away and how China quietly pulled the plug in the bond market. That was the first act of the story. Today, we are pulling the curtain back completely, and I will tell you about a much more frightening, much more insidious scenario, how the future will die. When you look at the stock market, the NASDAQ screens, the S&P 500 index right now, what do you see? Nvidia, Microsoft, OpenAI, Google, Amazon. They have all reached mind-boggling valuations of trillions of dollars. The charts are climbing straight up, as if challenging the law of gravity, shining as if they will never fall and will continue to rise forever. They told you a flawless story. Wall Street's marketers, CNBC's anchors, YouTube's tech gurus told you, artificial intelligence, AI, will change everything. Robots will work for us, efficiency will increase, corporate profits will explode, and we will get rich just by sitting in front of a screen, without needing to produce anything, just by holding stocks. And you look at those green arrows, watch the virtual numbers in your portfolio increase, and say to yourself, this time is different. This is not like the internet bubble of 2000. This is not like the housing crisis of 2008. This is a real revolution. Let me tell you a painful secret. Every disaster in financial history, and without exception, every major crash has started with exactly these 4 words. This time is different. In 1720, when the South Sea bubble burst in England, the smartest man of the era, the man who solved the secrets of the universe and discovered the law of gravity, Sir Isaac Newton, lost his entire fortune. On that day, he noted this historic entry in his diary. I can calculate the motion of heavenly bodies, but not the madness of people. In 2000, they said, the internet will change the world. This was not a lie. The internet really changed the world. But this change did not prevent those who bought Pets.com or Cisco shares from losing 90% of their money. The technology was real, but the valuations were a massive lie. Today, the situation we are living in February of 2026, is the greatest digital hallucination history has ever seen. Wall Street is selling you a wonderful dream. It is selling you software. It is selling you codes, algorithms, cloud systems, subscription models. But there is a terrifying physical reality that you are unaware of, hidden in the footnotes of companies' balance sheets, spoken of by CEOs only in whispers behind closed doors. Artificial intelligence is not a spiritual entity living in the clouds, consisting only of codes. Artificial intelligence is a living thing with flesh, bones, a stomach, and a great hunger. And the food of this creature is electricity, and the blood flowing in its veins is copper and silver. Right now, there is great panic in Silicon Valley. CEOs smile at you on stage saying the future is very bright, but behind the scenes they are begging energy companies and mining giants because their speeding cars have crashed into the physical limit wall. The AI revolution has not been canceled, but it has been postponed. And during this postponement, those overly inflated technology stocks in your hands, which have priced in the profits of the next 20 years today, will face the revenge of physics and mathematics. In this video, we will wake up from the digital dream and return to physical reality, that is, under the ground. We will talk about why smart money is selling technology stocks to small investors at the top and quietly collecting mines, power plants, and physical commodities, that is, the Great Rotation. Welcome. This is wealth history. And here, we believe not in illusions, but only in mathematics. Prices in the stock market can lie, CEOs can lie, but math never lies. What we call artificial intelligence is essentially a massive mathematical processor. Every operation performed in the universe pays a price. The name of this price is heat and energy. In the past, meaning in the simple internet era before 2023, when you made a search on Google, for example, when you asked, "How is the weather today?" this operation consumed about 0.3 watt-hours of energy on Google's servers. This is like lighting a light bulb for a second. Today in 2026, what happens when you ask the same question to ChatGPT 5, Gemini Ultra, or Claude? To provide that answer, the system scans billions of parameters in the background, thinks, calculates probabilities, and generates a response. The energy cost of this operation is exactly 30 times that of the old Google search. If image generation, video analysis, or complex code writing gets involved, this cost rises to 100 times. According to the latest leaked report from the International Energy Agency, IEA, the annual amount of electricity consumed by data centers in the world right now has surpassed the total industrial electricity consumption of Japan and Germany, and in just a short period of 3 years. This is not a gradual increase. This is an energy tsunami. The United States power grid is cracking under this load. Grid operators, PJM, ERCOT, are issuing emergency alarms. In Texas, in California, power outage risks are no longer a conspiracy theory, but a daily risk. Do you know what the problem is? America's and Europe's energy infrastructure dates back to the 1970s and 80s. It is old. It has rotted. No investment has been made. You can buy the latest model H200 or Blackwell chip from Nvidia for $40,000. You can pour billions of dollars and build a massive AI factory in the middle of the desert. But when you plug that cord into the socket, the grid collapses, fuses blow, transformers explode, because there is no highway, meaning transmission lines, to carry that electricity there. This is not an exaggeration. Today, in Northern Virginia, the data center capital of the world, do you know what they tell you when you apply to build a new data center? You have to get in line until 2030 for an electricity connection. You have to wait for a whole 4 years. The technology sector says, we will grow by doubling every 6 months, Moore's Law. But the energy sector says, it takes 5 years to build a new power plant, 10 years to lay a new transmission line. 2 trains moving at different speeds are coming towards each other at full speed on the same track. Collision is inevitable. Remember what Elon Musk said last year. Last year there was a chip shortage. Next year there will be a transformer and electricity shortage. He was right. Right now, the delivery time for a high voltage transformer has gone up to 150 weeks, almost 3 years. You can't get it even if you offer money because there is no factory to produce it. And do you know what the most ironic, most tragicomic part is? Do you know what those tech giants who have been shouting green energy, net zero, ESG for years and cursing fossil fuels are doing quietly behind closed doors right now? They are extending the life of coal plants. They are buying natural gas plants that were planned to be shut down. Amazon, Microsoft, Google, they are all struggling to build their own nuclear reactors, SMR, small modular reactors. They are signing 20-year purchase guarantee agreements with nuclear energy companies. So why are they doing this? Because you cannot feed artificial intelligence with a wind turbine or a solar panel. When the sun sets or the wind stops, artificial intelligence cannot stop. AI demands a base load power that is uninterrupted and non-fluctuating 24 hours a day, 7 days a week. Here, the Jevons paradox comes into play. History teaches us this. No matter how efficient you make a technology, like AI chips, total energy consumption does not decrease, it increases, because you use the cheaper resource more. Artificial intelligence is like a black hole swallowing electricity. At this point, as an investor, you must ask this simple question. While everyone is buying AI stocks, software, chips, who is buying the energy companies, uranium, and natural gas that will keep this artificial intelligence alive? The answer is actually very simple. Smart money is buying. They are selling Nvidia to you at the peak and moving into energy infrastructure. This is called sector rotation in the stock market, and those who miss this rotation remain under the rubble. Energy is not just produced, it also needs to be transported. It needs to come from the power plant to the data center, from the data center to your home. And the most efficient, most economical element offered to us by the universe and allowed by the laws of physics for transporting electricity is copper. There is no other commercially viable element in the periodic table that can replace copper. If artificial intelligence is the brain of this new world, copper is its nervous system. A brain without a nervous system is just a lump of meat. It cannot think, cannot give commands, cannot work. The situation we face in 2026 is a much larger, much more structural supply shock than the oil crisis in the 1970s. The bad news is that copper mines have dried up. The world's largest copper mine is Escondida in Chile. It is now old. The grade, meaning the ratio of copper in the soil, is falling dramatically. 20 years ago, when you dug 1 ton of rock, 15 kilos of pure copper would come out of it. Today, barely 5 kilos come out of the same rock. We spend more energy, consume more water, and get less copper. This is the law of diminishing returns. Goldman Sachs calls this the depletion of copper. I call this mathematical bankruptcy. Let me give you a few examples to help you understand the scale of the demand. While there is about 20 kilos of copper in a standard gasoline car, there is 80 kilos of copper in an electric vehicle, its battery, motor, cables. Wind and solar power plants use 5 times more copper per megawatt compared to coal plants. Because the energy source is dispersed, thousands of kilometers of cables are needed to collect it. Millions of tons of new copper cable are needed to make America's and Europe's aging grid suitable for net zero goals. And artificial intelligence data centers have a massive need for copper for cooling systems, chip connections, and power distribution units. These 4 massive waves of demand, AI, electric appliances, green energy, infrastructure, are colliding at the same time in a period when supply is most constrained. In the commodities market, this is called a perfect storm. So what is the solution? Are you going to say, let's open new mines? I wish it were that easy. Discovering a new copper reserve, doing its geological surveys, getting environmental permits, EIA, finding financing, building it, and starting production takes an average of 15 to 17 years. Tech companies say, we need copper now. Miners say, we can only give it in 2040. This gap in between will be filled by prices. There is no substitute for copper. There are those who say, let's use aluminum. However, aluminum is less conductive, heats up more, and takes up 60% more space by volume. Space and heat are the biggest enemies in data centers. Therefore, they are forced to use copper. You've heard the phrase, data is the new oil. Wrong. Data is just code. It can be copied, multiplied. You can create millions of lines of code with a keystroke, but you cannot copy copper. You cannot do alchemy and produce copper in a lab. Real oil is copper. And right now, copper is historically dirt cheap in the stock market compared to technology stocks. This is the arbitrage opportunity of the century. It is a mathematical necessity for the price to rise to a level that incentivizes opening new mines, meaning at least 3 to 4 times what it is today, incentive price. Now let's come to the metal that is most talked about in 2026, most manipulated in the world, and whose price is most suppressed, that is, silver. In my previous video, I described silver to you as a monetary metal, as an insurance, a shield against the collapse of the unbacked dollar printed by central banks. This thesis is still 100% valid. Besides this, in the year 2026, a brand new, terrifyingly powerful chapter has been added to the story of silver. Silver is no longer just money. Silver is now a strategic war metal. A silent revolution is happening in the technology world right now. Solid-state battery, the miracle technology that has been awaited for years, which will solve the range problem of electric vehicles, reduce charging time to 10 minutes, and end the risk of fire. Samsung, Toyota, and Chinese manufacturers, CATL, are moving to mass production this year. But these batteries have a secret ingredient that no one tells you about: silver carbon composite layer. Samsung's new battery technology uses between approximately 5 grams to 1 kilogram of pure silver per battery pack, depending on vehicle type, size, and capacity. Do not underestimate this amount. Do not say a few grams. Since old lithium batteries are inefficient and dangerous, companies have to switch to this new technology. If only 20% of the electric vehicle production in the world switches to this new technology, do you know what that means? It means the entire annual silver production of the world is consumed solely and exclusively by the automotive sector. No jewelry, no investment, no solar panels, no silverware, just cars. Look, the biggest difference between gold and silver is this. Gold is produced and stored. It stays in the vaults of central banks, on women's necks, under the pillow. The gold mined by Egyptians 5,000 years ago is still in the world, somewhere. But silver is consumed. Silver is an industrial metal. It is used as a paste inside solar panels, and recycling it is very difficult, often not economical. It is used at the tips of missiles, in Tomahawk missiles, in satellites, inside chips, and now in the heart of batteries, and it disappears. So silver stocks are decreasing. Above-ground silver reserves are at the lowest level since the 1950s. London, LBMA, and New York, COMEX vaults are emptying rapidly. Let's come to the relationship between technology and silver. Silver is the best electrical conductor in the periodic table, even better than copper. The faster AI chips get, the more they heat up. Using silver to prevent heating and reduce signal loss is not a choice. It is a necessity. The more efficient solar panels become, the more silver they use. TOPCon technology spends 50% more silver compared to old panels, and now it has to be used in batteries too. Silver is the indispensable element of technology. Without silver, there is no artificial intelligence. Without silver, there is no green energy. Without silver, modern life stops. So what about its price? Its price is still crawling in the $30–40 band, still below the $50 peak of 1980. This is not a joke. This is the biggest pricing error in the history of the free market economy. And markets correct errors sooner or later in a very savage way. When technology companies, Apple, Tesla, Samsung, start panic buying silver miners, and we are hearing the first whispers they are buying mines under the name of vertical integration, the price of silver will not only break the $50 per ounce barrier, but will go many times over it. Triple-digit figures, 100 plus, are a mathematical necessity. As if all I have told you, energy crisis, copper shortage, silver consumption, wasn't enough, let's throw a geopolitical bomb into the equation. Where are these resources? And more importantly, who processes these resources? 50% of the world's copper processing, refining, is in China. The majority of silver refining is in China. Lithium, cobalt, rare earth elements. 80% to 90% of the supply chain is under China's control. The Western world, America, and Europe made a huge strategic mistake for the last 30 years. They said mining is dirty work. It pollutes the environment. It consumes energy. Let us sit in Silicon Valley, do the design, stamp the brand, earn the money. Let China do the dirty work. They enjoyed this comfort. Apple designed in California, Foxconn manufactured in China. But now things have changed. Now China says, I am no longer giving you the raw material cheaply. I will make the battery. I will make the electric car, BYD. I will make the chip. You will buy the final product from me at the price I determine. Last year, China restricted the export of gallium and germanium, which are vital in chip production. The Western world panicked. What happens if you wake up tomorrow morning and hear this on the news? China has imposed quotas on processed copper and silver exports on grounds of national security. Do you know what happens? Nvidia cannot produce chips. Tesla cannot make batteries. The American defense industry cannot make missiles, Tomahawk. The stock market crashes. Industry stops. This is not a trade war. This is a resource war. And in this war, not those holding paper dollars, digital stocks, or Bitcoin ETFs, but those holding physical commodities, mining licenses, and power plants will slam their fist on the table. The West's financial capitalism, paper assets, is colliding with the East's industrial capitalism, physical assets. And the laws of physics will determine the winner. While BRICS countries are trying to index their currencies to gold and commodities, the West still thinks it will get rich by printing unbacked money. History has written the end of this hubris many times. To sum up, we have two different pictures in front of us. On one side, an artificial intelligence bubble with sky-high valuations, pricing in the profits of the next 20 years already, about to enter an energy bottleneck and unable to find physical resources. On the other side, silver, copper, and energy, whose supply is depleting, whose strategic importance increases every day, whose price has been historically suppressed and which have become the oil of the new world. The biggest rotation in market history, the Great Rotation, is at the door. Money will flow out of inflated and imaginary technology and flow into hungry and real commodities. When this flow begins, and it has begun for smart money, the dam gates will be completely opened. So what should you do? I am not a financial advisor. I just look at what history and math say and offer you a survival guide. First, do not get caught in FOMO. Do not run where everyone else is running, meaning to AI stocks, to meme coins. The crowd can be in the wrong place at the wrong time. If even the shoeshine boy is talking about Nvidia, the peak has arrived. Second, return to physical. Make room for physical assets in your portfolio. Silver is not just jewelry or a speculation tool. It is the fuel of future technology. He who holds it holds the energy of the future. Third, follow the energy market. Research which companies are investing in energy infrastructure, uranium, copper. In the gold rush era of 1850, those looking for gold often died in misery, but those who sold them shovels and pickaxes became rich. Today's shovel is copper, pickaxe is silver, and water is electricity. The system is rigged. The game was set up in the digital world, on screens. You were sold digital illusions. But physical realities will change the game. You cannot negotiate with the laws of physics. If there is no energy, there is no artificial intelligence. If there is no mine, there is no future. Get prepared. The plug is about to be pulled. Subscribe. Turn on notifications. The system will not tell you the truth. We will. While others dream, you continue to search for the truth.